What's up? What's up? What's up? Financially intentional people. We are back with our expert episode and our life insurance expert, Acquania Scarnay. Hey, Acquania.
Hey girl, hey, how you doing?
I'm great. I am super juiced to be talking about disability insurance. And we were like, what? Why would you be excited about talking about disability insurance? I'm excited because people have it and more people need to know about it. So I am excited for you to put people up on game about it.
Okay, well, let's talk about it. First and foremost, do you want to know what the heck it is? Because I know a lot of
Let's
people don't
let's
know.
yeah, most people don't. I mean, it sounds intuitive like disability insurance, but most people don't know when it kicks in. And then there's a difference between long-term disability and short-term disability. Then there's different kind of disabilities. I need to know if something were to happen to me and I'm not able to be a nurse anymore, how can I use my disability policy?
That
So
is a
let's talk
great
all about that.
That's a great
Yeah.
question. So, for those who are listening and you don't know, don't worry, I'm going to tell you. Disability insurance is the insurance that you get to pay you when you are unable to work because you are sick or injured. And it's really important that individuals understand, just like life insurance, that takes care of your family when you pass away. Disability insurance takes care of your family while you're alive and when you're unable to work. And there are some different types, but I want people to know that even if you have a disability policy with your job, it's still really important to get one for yourself outside of work. The disability insurance, they vary on the benefits and what types of conditions they cover. But the best way to explain it is when you have a private policy, you tend to have more flexibility on what it will cover and when it will kick in. Versus if you have a policy with your job, it might be very strict, it might be very specific to your job. Whereas when you get a private policy, you have the option to purchase features, right? It's just kind of like a car, you can personalize it. So when you have a disability policy outside of work, you can actually ask your agent, hey, I want a policy that's going to pay me if I can't do my job, but I will still be able to do other jobs. That's a very specific type of what we call rider that you put on your policy. So you know what that means? If you are, let's give an example, if you're a surgeon and you injure your hand and you're unable to conduct surgery, you will not be able to do your job, which is that of a surgeon. But let's say you can still teach at a medical facility or a medical university. Now you find yourself in a position where, yes, you might not be able to do surgery, but you definitely are employable. But because you are unable to do surgery and you purchased a policy that had that specific clause, you are able to collect a check for your disability insurance and you're able to collect a check for teaching because your policy's contract allows you to work elsewhere even when you're unable to do the job that you signed up for the policy for. So that's the most flexible type of disability insurance. But there's also a more restrictive one that says you can't be able to do any job. Those are more restrictive and obviously cheaper, but they're not necessarily what I recommend because you want to give yourself options, because you don't want to have a stipulation that says if you're employable, then we won't pay out, because then that means you could technically go work at McDonald's. But if working at McDonald's is not going to pay your pre-injury bills, then that's still not to your advantage. So you want to get a policy that actually can replace your income, and you want it to have some flexibility in it so that you have options.
So I know you said that your disability insurance at your job isn't enough typically, or you still want to have a policy outside of your job. Why is that?
So, first and foremost, we all know from 2020 and past times that no job is guaranteed. So, I always want you to have your own policy that you control and pay for, because that means that you having it is totally up to you. When you rely solely on your job's disability policy, life insurance, and other benefits, you are at the mercy of them. They can decide at any point to discontinue those benefits if they have to do budget cuts. They can decide to change vendors, which will also change how the benefits work for you. And you don't get a say. And they can also change you, right? They can decide you're no longer an employee at this institution. Goodbye. And now you have lost all your benefits. And now you're older. You may actually have had some sicknesses that may make it more difficult for you to actually qualify for disability insurance. Because remember, disability insurance is based on paying you income while you're alive. So they're going to look at your medical history. And they're going to look at surgeries. They're going to look at previous injuries. What have you been treated for? Whether it's therapy and mental health issues, or it could potentially be cancer. If you have been previously treated for what they consider to be a high risk medical condition, you may not qualify for disability, because if they think you're going to have to suffer from that again in the future, they may not want to cover it because they'll be paying in the future.
So I know there's different types of policies, and then they pay out differently. And then what is the term, like the exclusionary period or something like that? Like, isn't there a period where you have to wait before you can cash in, and they're different between the policies, correct?
Yes, that is correct. So with the traditional disability insurance policy, you have the option to pick what we call your own elimination period. So the elimination period is another way of saying the waiting period. How long will you wait before the check starts to come? This is why it's so important to still have an emergency fund, because normally the shortest elimination period on most policies is 30 days. But in order to get that elimination period, you are going to pay the highest price for the policy. The longer your elimination period, the cheaper the policy is going to be, right? Because they're just basically assuming that it's possible by the time you hit 60, 90, or 180 days, maybe you will be healthy and it's no longer a disability. But God forbid that it is still an issue for you and you are still unable to work, or you are permanently disabled. They start to pay you when the elimination period ends. And depending on your policy, they will pay you until retirement. So when you're working with an insurance agent to discuss the benefits, you want to look at the elimination period. How long will I wait before I get my first check? That's sometimes 31 days, because after the 30th day, 91 days, 180, 81 days, or so on. The longest I've ever seen is a year, but most people will not wait that long for disability to kick in, because then that means you probably have a permanent disability. I, on average, will recommend that people choose the 90-day waiting period so that they have 3 months of their savings saved to manage their finances in the meantime. And then once the 90 days are up, the disability will kick in to pay.
Okay. So what kind of policies do you recommend? Like, again, like long term versus short term, the elimination period you covered. But like, first of all, when should somebody start looking at disability insurance? And then what it will be the optimal plan for most people?
Okay, so that's a great question. So the traditional policies with the 90-day or 30-day or more elimination period tend to be the long-term disability policies. So those are the ones that, God forbid, if you do have some type of injury or sickness, it could be as little as 60 days, it could be as little as 90 days, but they'll cover it. But if it happens to be longer term, or what we call residual effects from that accident or injury you had, then that's what's going to pay you until 65, or in some cases until 67. You actually decide how long you want to get paid out. But ideally, they would stop paying you when Social Security kicks in, right? But a short-term policy is sort of like AFLAC, right? You can get AFLAC to cover two different types of your life. When you're in the hospital, so that's another type of insurance. Hey, for every day that I'm in the hospital, I want you to pay me because I'm not working. I'm sick, I'm injured, and I'm hospitalized. So like AFLAC sells policies where they'll pay you for that time period you're in the hospital, and that's short. And you're not waiting 60 or 90 days for that to kick in. You're hospitalized, they start to pay. Another option is that short-term disability. So short-term disability is shorter than, I would say, 90 days or 180 days. It's covering you for that small amount of time where, yes, you might have to rehabilitate or go to physical therapy and you had an injury on a job, and now this policy is going to kick in. One thing I do want to say, because some people don't realize this, life insurance, you get to decide how much you want coverage to be. And you purchase $1 million policy and $1 million is paid out to your family. Disability insurance is slightly different in that you get to decide how much you want to be paid out, but only up to 60% of your income. So why is that? Most people ask. The first reason is if we paid you 100% of your salary to stay at home, you would find a lot of people never get off a disability, right? They would find for medical purpose, reason, or, circumstance to justify continuing to remain in that status. Some of them legitimately, some not so much, right? So the companies are only allowed to cover 60% of your income that you earned prior to disability, but you have to purchase that amount, right? If you don't purchase the ability to get that 60%, they're not going to pay 60%. They're going to pay what you paid for. So I have some, depending on your income, 60% or a policy for 60% of your income could be very expensive. But you also have to consider the fact that if I had zero income coming in, would this be worth it for me? And the answer is yes. So truth be told, a lot of high income earners, doctors, lawyers, nurses, who feel like, hey, if I get hurt and I'm not able to work, I still need to pay my bills. I'm going to pay for that 60% policy. But for someone who's on a tighter income, but still needs coverage, single moms who have kids and they are the sole breadwinner of their family, individuals who are the breadwinner of their family, even in a 2-income household, or someone who just doesn't want to rely on anyone else for their income if something happens to them, needs disability insurance, right? But you can choose, if you have more financial options or streams of income, you could choose to only cover 25% of your pre-injury pay, right? Or 50% of it. And that helps you kind of manage the cost, because obviously the less you want disability to kick in, the less the policy is going to cost you. And insurance is always something that you're getting, hedging your risk, right? It is your risk protection, but we all hope we never get sick or injured. But the reality is, if you start at the age 21, most people will work a full career, and it is likely that 3 out of those 4 21-year-olds will be disabled at some point in their working career. It doesn't mean permanently, but they definitely might experience an injury that will result in 90 to 180 days out of work. And those are the people that need disability insurance.
It's definitely one of those things that I feel like people look at as a luxury versus a necessity, because it can be a little bit cost prohibitive. Mm-hmm. But when you weigh how much it costs monthly versus how much in your income is protecting, I really feel like it's worth it. It's just something that we have to budget for. And I know I pay a good amount of money for my disability insurance, but because I have so much riding on my income, like you said, I'm a nurse, single mom, the chances of me getting injured at work are very, very high. And if something were to happen to me where I couldn't provide financially, if I lose my nursing income, my household would fall apart. And I don't want to risk that. And yes, I do have an employee sponsored plan, but I have my own plan on top of that, which is up to 60%. Like I did play for a higher plan because I don't want to take any chances.
Mm-hmm. Yep. And that's exactly how it should be done. And I feel like a lot of people miss that part because they're always hoping and praying that nothing happens, right? Like but you have your car insurance, you hope you don't have an accident. But disability insurance, if something happens, it's bad, right? And if it's bad and you're not able to work and now you're not able to pay your bills, even more can happen. And the good thing about the right disability policy is that if you're injured, sick, recover, and then have a residual injury later because of some, impact of whatever you had, then it kicks in again. So it's not like a one and done. There are plenty of policies. You can use some of the benefit. You've utilized it. You keep paying on it once you're better. And then something else happens, could be a completely different injury. It's going to kick in again. And the other good thing to keep in mind is they're not going to get you while you're down. So if you are sick and injured and you have filed a claim for your disability policy to kick in, when you're disabled, you will not pay on that policy. So they're not going to take from your 60% that they give you. So to me, it's a no-brainer. I think the most important thing for people to remember is that, one, as your income increases, you are allowed to purchase additional policies. Granted, you will be evaluated at that current age and health stage, but the policies you already have in place, you are not obligated to cancel. So you can add insurance as your income increases. Another thing you can do is, if you have an existing policy, when you're in the application stage, remember when I talked about those benefits that you can ask for? You can ask for a policy that has a cost of living increase. You can ask for a policy that has the option to increase the benefit every 3 to 6 years. Naturally, you can ask for a policy that automatically does these things to keep up with inflation. So that way, in your mind, you don't have to tell yourself, oh my God, I only asked for a policy that pays me, for example, $1,000 a month. And then with inflation, that's not going to be anything. Well, the right policy, your inflation is calculated into that. So they'll pay more than what you actually paid for, because they're going to pay you that inflation surplus or that additional money to combat inflation. So companies know the value of a dollar is expected to change. They also anticipate that you're going to use this policy when you're older, right? That's what they hope. And I hope that for you too. I would never want someone in their 20s or 30s or even their 40s to have to use their disability insurance, but you just might. So your other question about when do you get these policies, I would say as soon as you're young and healthy and you can afford it, because you're right, because you are actually hedging the fact that you might need to replace your income. The higher your income is, normally the older you get, the longer you've been in your career, the more expensive it's going to be. But if you lock in a policy in your late 20s or early 30s, you're likely to get something at a very good rate. And you might even have a express approval, like not require as much medical, or maybe not require as many medical questions, because you're young and healthy.
Can you walk through the process of somebody with a 90-day policy gets injured? How do they go about using the policy to cover their expenses?
That's a great question. So all you do with most companies is you notify them at the time of the sickness or injury, the clock starts, and then at 91 days, they will start to send money to you. That's how most of them work. And even if you haven't been able to contact them, let's say you forgot to contact them when the clock started, a lot of times if you provide the proof of the injury or the incident, that is sufficient enough to have the clock start from the point of the incident. Also keep in mind, like, this could potentially cover some other things that happen to people. So for example, some of the policies I write includes a catastrophic rider or a catastrophic benefit. So let's say you are in an accident and you lose a hand, a limb, an eye, the ability to hear. Losing major senses also kicks in what we call a major payout. Because now you have some form of disability that's not going to go away. That hand's not going to come back, your eye, your ear, or your hearing. So now they're going to pay out, in addition to whatever benefit you ask for monthly, a lump sum if you have that catastrophic rider. I've also had policies that include a payout in the event of a cancer diagnosis. Any type of cancer, if you have that rider, you're diagnosed with cancer, curable or not, you get to exercise that rider and get that lump sum to help you with medical treatment. People fail to remember that in the United States, the main reason for a lot of bankruptcies is not consumer debt. It is actually medical debt. It is that unexpected medical expense you never saw coming. It is that medical diagnosis that required chemotherapy that you didn't have the insurance to cover. It is the things that we least expect, but we do because you want to live, right? And you're going to do whatever you can to live, but then afterwards you have to live with that bill. And so when you have the right health insurance, disability insurance in place, and even life insurance in some cases, you're able to cover those expenses, because there are some life insurance policies that I sell where even a term policy will pay you in the event of certain medical diagnosis so that you can pay your medical bills. So everyone assumes that life insurance is only for when you die, but if you have certain health issues while you're alive, your term policy can help pay your medical costs too.
Wow, that's really good information. Like, I really had no idea that there were term policies that did that. I'm really learning a lot. And I never heard about like the losing major senses and limbs also, and like having a lump sum. So that's really good information. So they send you this check, but these funds are non-taxable, right?
Yes. Isn't that the best part?
Yes.
So all these insurances, life insurance is a non-taxable benefit to beneficiaries. And if you have a permanent policy and you take out some of the cash, it's also non-taxable in certain situations. But disability insurance, when it's paid out to you, is also non-taxable. Why? You're already disabled, right? That's what I said. They're not going to hit you while you're down. They're not going to charge you for the policy. They're not going to tax your benefits. And so that could be something that benefits you for the rest of your life. And I want to say this because we didn't talk about this, because I know some people will say, well, what about Social Security? Isn't that going to take care of me? So for those who are watching, that face was classic. But the reality is Social Security, people assume it's only for when you're retired or when you pass away too soon. But there is a portion of Social Security that actually also pays you in the event of a disability as well. The problem is a lot of times it requires total disability, which most people will not meet that definition to get the Social Security benefit. Or if they do, they will have to continuously apply for consideration to keep the benefit. And that's why it's so important to have your own disability policy, so you're not looking at the US government to cover you or even agree that whatever you're suffering from, it qualifies for disability insurance to be paid out. But for those who are less familiar with Social Security, it does serve three purposes. One is to give your family income in the event you die too soon. So it will pay out to spouses and children under the age of 18 if you die while you have minor kids. It will also pay you in retirement, which is what most people know Social Security for, but it will also pay you in the event of total disability. So you could use that as additional income if you are disabled. Totally.
But it ain't enough.
It is not. It is not. And it is still based on whatever you've contributed to the system. So if you've been traditionally a lower income earner, your benefit will be lower. If you've been a traditionally higher income earner, it's probably still not going to be enough because you may require more to live. So it is there. I just wanted people to know it is there. And if you ever wanted to know what your Social Security benefit would be in the event of a disability, go check out your statement on the Social Security SSA.gov website. Log in, check it out. It's updated every single year, and it will tell you if you've worked long enough to qualify. It will tell you what your benefit will be in the event of disability, dying too soon, and in retirement.
I actually like looking at those statements because they keep track of your income every year, your taxable income every year. And that's how I remember like how much I made back in the day. So I actually think I'm going to go and pull up mine because I want to do a review of my income. And it's hard, like with taxes and all that stuff, to find it all over the place. But it's there, all in one place. So if you're ever curious about how much you made over the course of your life, your working years, if you paid into disability, they have the database there. So
yes.
I love looking at that statement.
I tell people to look at their statement every year. And this is why. The onus to report errors is on you. If you fail to report the error to the Social Security Administration, when you retire and they pay you the wrong amount, it's not on them. And just imagine if you work a 30-year career and you find out at 65 or 67 that the money isn't right and they want you to provide proof because the burden of proof is also on you. And you're like, I didn't work at that job for 30 years. They're going to be like, well, if you think that's what you're supposed to get, then you need to provide proof. So I tell people your statement is updated every year, check it every year. The best time to do that is in the spring, because at the end of the year in December, the jobs will send off the statements to Social Security Administration to finalize the numbers. In the first 3 months of the year, they will update everyone's statement and upload a new one. And so by March or April, you should be able to see, one, if your income has been properly updated, and two, what your total income has been over your career. And in the year that you see the mistake, you're supposed to report it. So don't wait 20 years or 30 years to talk about some job you did where you got all this money, but it's not on your record, because that's going to be too late, boo-boo. So check it every year, make sure it's right. And the way you can reconcile, if you're not quite sure, you don't remember, is you can look at your W-2 for the year and look at what it says as far as income for social, based on Social Security wages. That number should still be, should match whatever is on your statement. So as long as your W-2 matches the number on your statement, you're good. If there's a discrepancy, you raise your hand and ask questions. You can file a report online, or you can actually call them. So they make it convenient for you to contact them.
Yeah, it says that's gems, because I'm again learning more about like even how to read my W-2. So I was like, what does that box mean anyway? But you know what? I am like, the whole time I'm listening to this conversation, like nobody talked to me about the importance of disability insurance. And like, when does this usually come up as a topic of conversation? You know, we hear about life insurance, we hear about, saving for retirement, but like when we're at our, like, those things usually happen like at orientation, at your job, like, or there's somebody in your family that talks about it. But rarely do people talk about disability insurance. And so that's why I'm glad that you're coming on here today. But I think, like, for most people, they're like, well, how come I don't know about this? How come I didn't know how important it was, or how I can access it, or what it even looks like? Like, I think it's just something that I don't understand why it isn't talked about more, because, like you said, 3 out of 4 people are going to be injured at work.
Yeah, I don't know what it is. And I think maybe it's like you said, it is costly for some. The older you are, the more injuries, surgeries, or ailments you already have. But when you're young and healthy, it's pretty affordable. And I think it's totally worth it. But honestly, I don't think I had my first real serious conversation about disability insurance until I met with my first financial advisor. And to be honest, that was when my husband and I just got engaged, and we were looking for someone to help us get our finances on the same page together. So if you are not actively pursuing those types of money conversations with professionals, you're less likely to have this conversation come up, because my girlfriends and I were not talking about disability insurance, and nobody puts up a GoFundMe account for disability insurance, right? But sometimes they do put it up when Auntie JoJo's been in a car accident and can't work. Or in my family, real life, this happened last year. Someone was sick and like going through treatment and was potentially never going to be able to work again, didn't have disability insurance. And so they were asking the family to contribute to a fund to be able to take care of the nurses and the family to take shifts to take care of this person. And I was like, man, if you had disability insurance, that might cover some of your costs, So that's where, the lack of education is real. And it's because people are not focused on it. And to be honest, like, I think more people should know about life insurance, but they don't. And the other thing that I didn't even mention is some disability policies can help you in the event you have challenges. So one example is I've written a policy before that included support if you become addicted to a substance, whether it be alcohol or drugs. Now, nobody wants to say, I'm susceptible to this because it runs in my family, or it could happen to anyone, right? But if it does happen to you, you could potentially use your disability coverage to pay for your medical facility treatment or your recovery treatment. Now, granted, in order to qualify for that, you cannot be a known addict at the time of application. So, of course, with most insurances, if you have the diagnosis, they're not going to cover it, right? In the future, they may exclude it. They have the right to exclude certain things sometimes. But if you've never had an addiction and it is in your disability policy to provide support and funding for recovery, then 10 years later, if you become addicted to something and decide to get help, your disability policy could cover it if that's a part of your contract. Just like all life insurance and car insurance, it is a contract. You have to read the fine print, but that's a really good benefit that most people don't even know is in their policies.
So when people come to you and ask you for policies, what does that process look like? Is it similar to life insurance, like getting life insurance? Like, how does it work?
Absolutely. For me, you come, we have a conversation, you fill out a questionnaire so I know more about your occupation and what it is you do for a living. And they do ask questions about medication you're currently taking, previous surgeries you've had, and any medical issues, right? But they're also going to ask about the type of work you do. Why? Because the more riskier your occupation, the more it may cost them to prepare for the risk that you'll be injured at work, and they'll want to use some of that to defer the cost on you. So for example, anybody who works at a computer, and I'm just giving examples, I am not an underwriter, but most cases, you work at a computer, you stay at a computer all day, you work in an office, you do techie stuff or admin stuff, your policy is probably going to be cheaper than a construction worker who is actively on a construction site and, you know, handling ladders and heavyweight equipment, right? So what you do matters, but it doesn't mean you should lie or not tell the truth about what you do, because trust and believe, you do want to get paid when you're not able to do what you do, and you need to be honest about what that is. But it will be more expensive, right? It may be more expensive for a police officer to get disability insurance than, say, a secretary.
Are there cases where, like, unions, like I know, like for our unions, we have certain disability policies sometimes, or life insurance policies that would on the outside cost more because of our profession, but because it's, you know, a collective group and, you know, that the insurance works through pooling, that is actually cheaper. Have you seen disability policies distributed the same way?
Yes, absolutely. And the reason that is because there's a big thing called group, right? You get a discount for a group. The more people you insure, the cheaper it is for everyone. So yes, it is true that if you're a part of your union and they offer policies, you can get it cheaper sometimes through your job. But again, you need to make sure you read that contract and determine, is this policy tied to my job? And if I leave, I lose it? Or is this policy mine? And if I leave, I keep it? That's going to be, for me, a deciding factor on whether or not you should invest your dollars into that policy.
Right, that makes sense. And I was more or less talking more about labor unions, which kind of do follow you job to job if you stay in the same industry, in the same profession. But still, it's the same kind of thing you want to look at and make sure if you leave that union or you change industries, that you're going to have something that stays with you. So you always want something of your own to stay with you. So, Acquania, how can people reach out to you to get these policies in place? Because now we know how important it is, and y'all better stop sleeping on yourselves.
Absolutely. Check me out at The Purpose of Money on Instagram, or check out my website, www.thepurposeofmoney.com. I do offer a free consultation to discuss all your insurance needs. So if you sign up for a free consultation, we can talk about your personal situation. So hope to see you on Instagram, or check out my website, thepurposeofmoney.com.
Thanks again, Acquania. Another great episode with a lot of information, and you always put me up on game. So I always have to give you a props.
Thank you so much for having me. Until next time, keep building generations.